I was meeting with a business owner last week, and he mentioned hosting meetings at hotels and how expensive they've become. I mentioned if him and his CPA had talked about the Augusta Rule, and he looked at me like he had no idea what I was talking about. Walk us through that.
Sure. So the Augusta Rule is actually Section 280A of the Internal Revenue Code. What it states is that you can rent your home out and receive 14 days or up to 14 days per year of rental income for your primary residence and not claim it on your tax return as income. What this rule actually allows business owners to do is take advantage of this from a tax planning perspective. They can rent their home to their business for 14 days per year or up to 14 days per year. And the business is able to pay rent to the owner for use of their home. That expense to the business becomes tax deductible. And then the income that's received from that, from the business owner for renting their primary residence to the business, is also tax-free income. So in the example of what you gave with the conversation you had last week with the client, it's a wonderful opportunity to go ahead and use this loophole in the tax code to take advantage of some low-hanging fruit from a deductibility perspective.
Would you say most people are taking advantage of this today?
Actually, no. I think a lot of people have started to hear more about it, but don't really know how the nuances work. And so it's really important to consult with your CPA to make sure that he or she blesses the actual process. But generally speaking, what we found is that documentation here is key. So having a comp for what you generally rent your house out for needs to be documented. One of the things that we've seen other CPAs recommend as a best practice is to hop on a website for short-term rentals like an Airbnb or a VRBO and get some comps for what your house would typically go for on a short-term rental basis to then print out or save as a PDF in your tax file so that if an auditor ever wants to question this or say, hey, where did you come up with this nightly rate for what you rented your home out to your business for? At least you have something to reference. So I think the key there is documentation. And of course, as always, consult with your CPA to get his or her advice on how to document this and comply with the rules.
Ultimately, they're going to be one filing the return, so they do need to be involved in that process and what it takes for that. So thanks for sharing that today.
So if you're a business owner wondering, should I be utilizing the Augusta Rule in my overall tax strategy? Or are there other strategies out there that I'm not even aware of? We have a great free resource for you to download. Once you've worked through that, if you have additional questions, we'd love to hop on a call and have a deeper conversation with you around this. Hop on our website at instrumentalwealth.com, schedule some time with one of our advisors.